came in and made a lot of noise, so I'm gonna go right back to it. So the put trap contract is when you're betting money on a stock dropping. So let's see what. Let's put that down because that is something you need to remember. Um, Betting on the share price personally, I'm not that good when it comes to buying puts. Sometimes I will get the right put, but I'd rather risk losing all my money on a contract call versus hedging it with a put, and then my contract goes up my call contract goes up and then end up just wasting money on puts. Like, I only like to buy puts when I see the market is about to crash, and this is why you also need to do your own background information on certain stocks that you're interested in because every stock is different. Personally, I trade mostly with Microsoft, Facebook, um, who else? Microsoft, Facebook, and SPY because they move a lot of dollar amounts in a single day. So if you like to day trade, you can make a lot of money in just one day, but you can also lose a lot of money in just one day. So that's a risk that comes with it. And the thing with put contracts, for them, you remember how gamma is how much, no, delta is how much you would make, and gamma is how much, delta is how much money you make when a price is going up. Delta for a put contract is how much money you lose. So for this, you would lose $32 when it keeps dropping. And for gamma, you're only gaining what, $4. So this actually might be a decent contract because the high was really high, and the volume is pretty good. But I don't know. I don't really buy put contracts. So if you are looking more to make money on on when share prices are dropping, you should look more into people who are really good with puts because personally, I'm not the best with puts. One thing you need to know for sure when it comes to day trading is that you only get 3 day trades in the time lapse of 5 business days, and they track it on Robinhood. But Robinhood is just one trading platform. So what I usually do is I'll use my Webull, my TD Ameritrade, and my Robinhood. So that's a total of 9 day trades instead of just 2. But since I don't have my phone, I only have like 3 day trades. And the thing with day trades is you need to make sure you're spending it on the right trades because there have been times where I had call contracts that were 100% in the money, but I bought it the same day and I wasn't able to sell it because I ran out of day trades. So I ended up losing that money and I had to wait till the next day. And sometimes, the stocks are only good for one day. So it was in the money one day and then it's like and then it's like I'm down to $32 on a call contract because I didn't get to sell it in time. So that's something you need to definitely make sure you keep track of when it comes to selling call contracts because the amount of money I've missed out on just because I ran out of day trades is actually ridiculous. I think that was that's my biggest problem. I sometimes get crazy with the day trades. So it's hard. It's hard for me to I try to be way more meticulous with the options I choose to buy and sell, and the options I choose to buy and sell for my day trades. Um, what else do I need to mention? Um, I actually really like Robinhood because you can when you transfer your money, it'll instantly hit the account, but the money will be pending in your bank account. So you got to make sure you have that money still sitting in your account. Like it'll make the money available to trade like immediately, but still has a process on the bank end. That's one thing I do like. And Robinhood does not charge you per contract, because on TD Ameritrade they charge you 65 cents per each contract you purchase. Here it's you just pay the contract price for the strike price. Oh, does that make sense to you guys? Strike price. So we're gonna just go over contracts and stuff to make sure everyone remembers the important things. Um, I have to also make a note. Wait, did I say the gamma shows how much money the trader will make on each? Wait a minute, that's not right. Let's just go on this one and look at some contracts. The delta. Ooh, that was wrong. See, this is why it's always good to check your notes. The delta shows how much money the trader will make on each dollar past the strike price. And the gamma shows how much money a put contract All right, so these are things we have so far for our call contracts. I'm going to underline that and make sure people pay attention to these notes. That's what I have so far. When I first started off, I started off with $300 and built it up. I added money later on, but I literally traded till I got to $800 off of $300 because I just wanted to see if it was possible. It does take a little bit more time because you don't have as much buying power, and the buying power is the amount of money that you have available to trade. I used some of my buying power to buy 2 expensive call contracts. And these call contracts, the strike price is $3.23. The current share price is at $3.20. What I like to do, well, this is one of my trading strategies, is like if I see a contract dropping near the end of the week and it's still dropping, I'm gonna buy a contract with a strike price close to where the high was, because it's gonna be cheaper, and it's more than likely that the share price is gonna go back to that price again within the next week. So you see, the high was 326 this week. It was 326, and I bought my strike price. My strike price is 323. So all I needed to do is already get to 323 for me to be in the money, and it doesn't expire until the 31st. Today is the 24th. I have some time, you know. I have some time for this weekly contract to age. So what I'm gonna do is we're gonna monitor these 2 contracts, and we're gonna see how they do within this week coming up, and I'm gonna show you if I made money or if I lose money. So we're gonna get to see the trading in real time to see how it goes. And let's see if there's anything else I need to mention. Anyone who is interested in having a Robinhood account, I'm going to post a link of Robinhood so you can directly download it. And when you download it using my link that I send you or that you select, you get a free stock with it. So, that works both ways. You could start off with a little bit of coin. Like, you don't have to start off at $1,000. Some people do like to start at $1,000 because it's easier for you to make that money grow faster because you can buy more expensive contracts, but you do not have to. What I suggest is that to even start practicing, you can paper trade on TD Ameritrade. I'm going to show you guys how I work TD Ameritrade in another video, but this is the app that I use to trace my stocks. Like you see, I have my Fibonacci retracements right here, and each color shows how much I'm in the money and how much I'm out the money. You see, like this was the low and this was the high of the week, and so it's going to be easy to trace it when the market opens again on Monday to see how much money I'm going to make within the week with the Fibonacci retracements. But that's a whole nother video. This is just the basics on how to start up your Robinhood, how to make money on it, and and that's it. Thank you so much for watching, guys. More trading videos will come. Like, comment, subscribe if you haven't already, and make sure to click the Robinhood link that I'm going to put in the description box so we can all become little traders and